Okay. Hi. Shall we start now? Chalo, great. Okay. So yesterday we had an introduction in our first class where I told you that our whole portion is divided into four parts, right? So we had 50 marks of what? Cost audit, followed by 25 marks of management audit, followed by 15 marks of internal audit, and followed by 10 marks of two topics, 5 marks each. One is forensic audit and one is anti-money. Now let us first understand, sir, what is the first requirement of basics of what? Cost audit. So understand one thing, before reaching into any topic, it is very much necessary from our angle and our point of view that we should know from where the preamble of the cost audit has come. Now let me tell you the whole history and background of the cost audit so that you will get an idea. Now see, you all know that World War One and World War Two happened. World War One happened in the early 19s, and World War Two happened in the like mid of the 90s of the century, like 1942 or 1947 or 1944, in those years, right? So when the World War happens, what is a major problem comes in an organization for a country? The country is destruction of property. Am I correct? Destruction. And whenever the World War happens now, the very first thing what they will target is nothing but your economy, because they want to touch the spine of the entity, they want to touch the spine of the country. So they will first destruct and destroy your what? Factories, manufacturings, plants, production plants, everything they will destruct it. Now what happens during the World War One and World War Two, when the so much of destruction took place, the demand raised very high, but the production was very less. So government, what the government did, government started giving what? The contracts to the private players and the private companies. Okay, you also start manufacturing this, you also start manufacturing this. Suppose we have given the iron and steel to somebody, we have given the rubber and tire to somebody, we have given the tea and coffee to somebody. So government started giving the cost plus contracts. What do we call them? Cost plus contracts. So slowly government started giving the contract to the private players. So government never realized what these private players are doing. Private players have started doing scams and scandals. What they do? Suppose an item is costing rupees 8 per item, but they are charging from the government 12 rupees. Are you getting the point? The unjustified high cost of production was the biggest issue what the government was facing before independence, when the World War One and World War Two happened. Now what happened? Then the government organized some committee and some commissions, that is Vivin committee and Datta committee. Now Vivin committee and Datta committee sat together and they found out the solution ki boss, we are giving a lot of importance to which accounting? Financial accounting. It's time that we should also start giving importance to which accounting? Cost account. Then they realized. So then they started conducting the audits on the entities who are charging the money from the government. Now, say for example, I'm a government, you are charging me how much money? 12 rupees. But actually, the cost is only, am I paying you 4 rupees extra? So, why should I pay you 4 rupees extra? So, it means I deserve my amount to be lower or higher? Higher. Sorry, lower. So, I will conduct what on you? Cost audit. So, by conducting a cost audit on you, I will start. So, thoda volume decrease karo. Decrease the volume. That's it. So to make sure that you should not charge me the unjustified amount, so I started conducting what on you? Cost audit. This is what the history and background of introduction of cost audit in the Indian economy. I hope you understood. So let's understand the basic genesis of cost audit. So what they are saying, everyone, start reading. They are saying that the concept of costing and its principles are introduced pre-independence. पूरा रीसाउंड हो रहा है. You all are writing in December 25, right? So you have every right to ask any kind of doubt in the class, right? The wherever you think that something is going beyond your, so just keep on asking the doubt. Are you getting it? There's no point of. Just slow down the voice. and it's resounding. Voice is slow, but here it is resounding actually. Yeah, it's better. Is it better now? Yeah. No problem. I'll speak a little bit louder. No problem. Okay, fine. So let's understand the genesis of cost audit. So whatever the history background I told you, let's understand from here. What they're saying, the concept of costing and its principles were introduced in the which era, everyone? Read the point. It is pre-independence, when the government was offering cost plus agreements and contracts to the different what? Companies during the World War II because of its which demand? Increased demand. Now what has happened? But certain companies were involved in scams and scandals. Certain companies were involved in scams and scandals in the form of what? Unjustified increase in cost of production. So they started charging high to the home government, due to which so many commissions were incorporated by the government. So government incorporated namely two commission. What is the name of the first commission? Vivian Bose, and the second commission is what? Datta Commission. So what they did is they were organized to look into the matters, due to which government realized that ki boss, costing is a which concept? Unique concept, and it is as important concept like a which accounting? Financial accounting, and we should also do auditing practices in the which area? Costing. That is the reason the birth of the cost audit was little bit delayed as compared to financial audit. So that is the reason majority of the market was already occupied by the practicing CS. Later on, practicing CMA started coming and became popular. Today also, if you'll see, one of the major audit what a practicing CMA can do is cost audit only. They are not 99.99% of the statutory audits or secretarial audits are either done by practicing CS or practicing CS. But nowhere you will find it, very rarely, that practicing CMAs are involved in what? Cost audit. That is a major problem, right? Then this is a little bit of history and background which should be aware of. Now understand one thing, our concept of institute did not start in the year it is which are written over there. Our institute first was incorporated as a company under the Companies Act to 1913. I hope you know that there are so many Companies Act in India. One of the Companies Act in India right now which is going on is 2013. So before 2013 it was 1956. Before 1956 it was to 1913. Before 1913 it was 1882. Before 1882 it was 1860. So we have a long history of which act? Companies Act. So first institute was organized as a company. Now you can see what is written, the Institute of Cost and Work Accountants of India. Right now our name of the institute is ICMAI, but when it was made as a company in 1944, the name was Institute of Cost and Work Accountants of India. It was incorporated as a company under the which act? Companies Act 1930. Is it clear? After that, what happened? In 1959, then the central government realized, ki boss, we have to convert this company into an act. So 1959 mein what happened? The ICWAI Act was enacted under the Act of Parliament. So how we will come to know that whether it is still an act or not? If you'll see your study material of the ICMI, it is written Institute of Cost and Management Accountants of India in the bracket set up under the Act of Parliament. If you have not seen that, you must see that institute. Like, let me show you, like you will be able to understand. So this is our institute material, right? So in our institute material, if you'll see, read what is written below. Statutory body under the Act of what? Parliament. This happened in which year? This happened in 1959. And remember, this is all what we are doing is a part of your cost audit. You should know preamble and background first. Then what happened? 1965 में central government realized कि boss, we have converted a company into an act. Now it's time to introduce a cost audit. So cost audit concept was first introduced in the year what? 1965, and it is a which audit? It's a turnover based audit. It's a which audit? I hope you remember there are total how many industries we have? 39 industries, right? So 39 industries ko government has divided it into two parts. One is known as regulated part and one is known as unregulated sector. In the regulated sector, 6 industries are there. Unregulated में 33 industries are there, right? So they implemented cost audit in 1965. So remember the year 1944, where what happened? We incorporated this ICWAI as a company. In 1959, what happened? The ICWAI was enacted under the Act of what? Parliament. And in 1965, the first time government introduced what? Cost audit. And it's a which audit? Turnover based audit. If in the year you're meeting the turnover, the audit will take place. If no turnover, no audit will take place. Now, next point. From 1965 to 2008, what happened? There were 44 industries. How many industries? Then government realized कि boss 44 industries is a very like huge task for the government to realize. Then 44 industries were covered under the cost audit and cost records maintenance. In 2008, government again made one expert group. So this expert group, what was the purpose of incorporating this group? This group incorporated the 44 industries come down to what? 39 industries. So then they said that, sir, only cost audit is not possible. We have to introduce the cost records and audit rules. So finally in 2009, the report was submitted by this expert group. In 2011, government took the first step of organizing what? CRA rules were framed. So actually the history of the CRA rule is not 2014. It is 2011. Then what happened? 2014 में Companies Act 1956 got changed to what? Companies Act 2013. So again CRA rules were reframed in the year what? 2014. Under the Companies Act 2013 was introduced. So this is what the broadly speaking our history and background behind our institute. So right from the beginning, 1944 में what happened? We incorporated our institute as a company. 1959 में we converted this company into an institute by setting it up under the Act of Parliament. 1965 में cost audit was introduced. Then 1965 to 2008, 44 industries were covered under the which audit? Cost audit. Then in 2008, expert group was incorporated to further reduce the number of industries to what? 39. 2009 में they gave a report कि we can reduce the companies to how many? 39 industries. And finally, in 2011, the first CRA rules 2011 were incorporated. And once these rules were incorporated, then in 2014, due to the shift from Companies Act 1956 to Companies Act 2013, they were renamed as CRA rules 2014. And I already told you in the yesterday's discussion, we have how many rules? 6 rules. Rules are 6. Forms are 4. Registers are 31. How many registers? 31. Industries are 39. Every day, if you will keep on repeating once, it will get fitted in your head. Then CASR 24. CAASR how many? Did you get the point or not? So our whole profession is revolving around those 6 figures only, right? I hope you understood the history and background. And I think this is enough time we have to spend towards the preamble. This is what the basic like history and background you should have known about the which audit? Cost audit. Now, let us start with the very first section without fail. The very first section which we have to start today is known as section number 148, which is going to talk about audit of cost record. We call it as audit of cost records. So generally we call it as a cost audit also, but at the same point of time, we call it as audit of which records? Cost record. Now try to understand in India. First of all, there are some basic things which you need to be very clear. Please come. What are the basic thing? Number one, cost audit is not a statutory audit. That is the first thing you need to learn. Sir, what do you mean by statutory audit? Even though cost audit is an audit under section number 148, it is under the statute only, but it is not a statutory audit like a company audit. It is not a statutory audit like a financial audit. Now, what do you mean by financial audit? Either you make a profit in a year or you make a loss in a year. Audit takes place every year. FS audit takes place every year. But when it comes to which audit? Cost audit, it does not take place every year. It is a turnover based audit. It's a which is so 1 year turnover meeting, audit will take place. 1 year turnover limit is not meeting, audit will not take place. So it's a which audit? It is not a statutory audit. Which one is a statutory audit? Financial statement audit is a which audit? Statute. So sir, if it is not a statutory audit, is it a part of statutory audit? Answer is no. It is neither a statutory audit nor a part of statutory audit. It is in addition to statutory audit. So what do you mean by that? Let's say for example, Vizag Steel Plant. Which company? Vizag Steel Plant. So Vizag Steel Plant is making sales and purchase also. So when the Vizag Steel Plant is making sales and purchase, please tell me, will they be having FS? So for that, they will hire a practicing CA to do a which audit? Statutory audit. But at the same point of time, what we are doing? We are doing a cost audit. So Vizag Steel Plant is doing cost records also, is also maintaining financial statements also. For the financial statement, they will hire a practicing CA to do a which audit? Statutory audit. And for the cost records, they will hire a whom? Practicing CMA to do a which audit? Cost audit. So it means on the Vizag Steel Plant, there are one audit taking place or two audits? Two audits. One is statutory audit and one is cost audit. So hence proved cost audit is not a statutory audit. Neither it is a part of statutory audit, rather it is in addition to statutory. 100% clarity here. Okay, moving ahead. Sir, cost audit is basically applicable to which entities? It is applicable to entities which are in manufacturing, production, processing, mining, extraction, and assembling. Repeat the six words. If your client is involved in manufacturing, mining, production, processing, assembling, and extraction. Now, what is the reason, sir, these six industries have been chosen? The reason being very simple. In these industries, raw material and labor is very common. What is common? Raw material. You name any industry, you will find that raw material is also common and the labor is also common. So tell me, what are the six industries? If your client is into manufacturing, mining, production, processing, assembling, and extraction, in everywhere you need two things: raw material and labor. So these are the entities who have to start preparing and maintaining the which records? Cost records. And on them, what will take place? Cost audit. That will understand in rule number 3 and 4. But did you understand the first and second point? So cost audit is not a statutory audit, nor it is a part of statutory audit. It is in addition to statutory audit. What is the second point maybe we are understanding? Is sir, cost audit is applicable on the entities which are involved in manufacturing, mining, production, processing, extraction, assembling, where they are making the use of raw material and, am I correct? Now, next point what they are saying is cost audit is also not a regular audit. Cost audit is not a regular audit. So what do you mean by cost audit is not a regular audit? Tell me, cost audit is a which audit? Turnover based. So is it regular or irregular? May happen, may not happen. So it is neither a regular audit, nor a periodical audit, nor a yearly audit, unlike statutory audit. Did you get the point? So it's neither a regular audit, nor a periodical audit, nor a which audit? Yearly audit, like a which audit? Statutory audit. Next point. Sir, who can only and only do the cost audit? Remember, it is specifically mentioned in section number 148. Only practicing CMA can do the audit. Who can only do? We can't allot the cost audit to practicing CA. We can't allot the cost audit to practicing CS. Only and only who? Practicing CMA. Is it clear? Now, once the introduction part of first 4 points are over, now we are moving to the point number 5. What is the point number 5? Now read it. What they are saying? He said there are total 6 rules. How many rules we have? 6 rules. But we are going to do now 2 rules. What is the rule number 3? Rule number 3 is on cost audit, and rule number 3 is on, 3 is on cost records, and 4 is on cost audit. So there are total 6 rules, out of which 3 and 4 we are going to do now. 1, 2, 5, 6. We'll do it in the next chapter where CRA rules will do. So let's understand 3. Now see what they're saying. If you are any of these industries, 6 industries, you know, either you are from a regulated sector or you are from an unregulated sector. If in the preceding financial year, which financial year? Preceding financial year, if at your turnover is greater than equals to how many crores? 35 crores. So you have to start maintaining the which records? Cost record. Did you understand the point? So again repeating, which financial year is going on right now? 25, 26. But we have to check 24, 25. 24, 25 ka balance sheet date is 31st March 2025. So 31st March 2025 ko I'll go to the trading account. In the trading account, if my turnover, the sales is greater than equals to what? 35 crore. So 25, 26 May, I have to start maintaining what? Cost records. And the beauty about the cost record is once applicable, always applicable. So once it is applicable, when? Always applicable. Now it is not turnover based like audit. So once you started maintaining cost audit in cost records in 25, 26 financial year, so 27, 28, 28, 29, for the lifetime, you have to start maintaining what? Cost record. But cost audit is a turnover base. It may happen, may not happen every year. Did you understand the concept? So tell me, what did you learn in rule number 3? So rule number 3 simply states that maintenance of which records? Cost record. When you are a manufacturing company, mining company, production company, processing company, extraction entity, or a assembling entity making the use of raw material and labor, and in your preceding financial year, if your turnover is greater than equals to 35 crores, so this present financial year mein, you have to start maintaining the which records? Cost records. And once you will start maintaining the cost records, it will be permanently applicable. There is no turnover based, unlike we have it in cost audit. This is what your rule number 3 is. Is it clear or not? Now, sir, what do you mean by cost records? Whenever we talk about the cost records, there is one thing you need to understand. Form number is CRA1. What is the form number? CRA1. So what do you mean by CRA1? CRA1 tells you those 31 registers which you have to maintain. That will understand from the material. Let me show you that from the material itself only. So what are our cost records? Let's read those cost records. Maybe I having it in the rule number 3, right? Now this is a rule number 3. Either you are from a which sector, regulated sector or unregulated sector. In the preceding financial year, if your threshold limit of 35 crores or more, you have to start maintaining the which records? Cost records. Let me see the CRA ones. Yeah. Now this is what I was telling you about the 31 records. This is a 31. Now start reading. What is the first record, everyone? Material cost record. We have employee cost record, utility, direct expenses, repairs and maintenance. Again repeating, you don't have to remember the list. Just go through it once or twice. You'll automatically remember it. Basically, our costing concepts these are. So fifth one, sixth one, fixed assets and depreciation, overhead records, administrative records, transportation records, royalty records, 12 control. What do you mean by royalty, by the way? Royalty and technical know-how. Anybody knows the difference? What do you mean by royalty? You must have heard about royalty. What do you understand by the term called royalty? Any answer? No problem. क्या होता है सर रॉयल्टी? एनी आइडिया? आपका नाम? आई नो यू एक्चुअली फ्रॉम हाँ हाँ करेक्ट करेक्ट टेल मी व्हाट डू यू मीन बाय रॉयल्टी? ट्राई टू सी if I'm making one book, do I have a copyright? So I gave my book to be published by Shikra Tutorials. Am I correct? Suppose Shikra Tutorial is a publication center. So I told to the Shikra Tutorials that on every one unit sold, you will give me 25% royalty. So if you are selling my book for 500 rupees, so I deserve 125 rupees on per unit. Am I correct? This is called royalty. Difference between royalty and technical know-how is what? In the technical know-how, I myself is coming and delivering the lecture here. So this is called technical know-how. But if I'm selling my lectures via tutorials and they are paying me what? Royalty. So am I teaching or I'm selling the already recorded classes? In the GD classes, I'm selling already recorded classes. So in that case, I'm going to get a royalty. But if I'm taking right now the face-to-face classes with you people, now it is known as what? Technical. That is what the difference between royalty and in both the case you charge a fees, but royalty may you charge it on your intellectual property, right? and technical know-how may you yourself come and teach. Are you getting it? That is called technical know-how. One, we have quality control expenses, then we have pollution control expenses, because I would like to tell you some words which you might not be aware of. That's why I'm telling you. Next point, service department expenses. We have one, packing expenses. क्या होता है packing expenses? Like there are two types of packing, primary packing and secondary packing. One is like, do you have masala in Maggi or not? So masala will be given to you openly or in a pack. So that is called primary packing for masala. But does that come in a black cartoon box or not? So that is called secondary packing. So we have to maintain packing expenses, finance cost if you have taken any loan, capacity, installed, actual, practical, every capacity will be written here. 19th one is byproducts and joint products. What is the 22nd? 22nd one is adjustment of what? That you must have done in your standard costing, budget minus actuals, you get what? Variance. Then we have reconciliation of cost and integral, non-integral registers. Then we have related party transactions, if any transaction taking place between holding and subsidiary. We are just going through. Then expenses for incentives on what? Export. You have production records, sale records, cost statements, statistical records, records on what? Physical verification, and finally what? Units of measurement. So these are known as CRA1 cost records, which we have just now completed. So tell me everyone, any doubt in the rule number 3? What is rule number 3 saying? Tell me. When you will start preparing the cost records in your preceding financial year, if your turnover is greater than equals to 35 crores, in the present financial year, you have to start maintaining the cost records if you are from mining, manufacturing, and any of these entities. Once it is applicable, it is always applicable. Cost records must be prepared as per the form number what? CRA1, which is including how many registers? 31 registers. 100% clarity. Okay, now let's understand rule number 4. What is rule number 4? Rule number 4 is on cost audit. Sir, what do you mean by cost audit? To understand, I already told you is central government has notified how many industries? 39, out of which 6 are known as regulated sector and remaining 33 are known as what? Non-regulated. So what are the 6 industries? You can call it as step FD. Now, what do you mean by stepfather and daughter? Just remember like this. Stepfather and daughter. Step में S stands for sugar, telecom, electricity, petroleum and gas. F में fertilizers, drugs and pharma. Repeat the 6. Stepfather and daughter. Sugar, telecom, electricity, petroleum and gas, fertilizers, drugs and pharma. Out of 39.6, remaining everything will fall under 33. So we don't have to concentrate on that. Let me ask you, what are 33? Tire and rubber, they are non-regulated. Tea and coffee, non-regulated. Aircraft manufacturing, non-regulated. Iron and steel, non-regulated. So you have to concentrate on 6 instead of what? 33. So if we'll concentrate on regulated sector, it means we are already aware about what? Unregulated sector. So total industries how many? 39. Out of which 6 are regulated, 33 are unregulated. What are the 6? Step father and daughter. Step S, sugar, telecom, electric. Don't get confused between power and petroleum, otherwise it will be confusing. That's why I kept it as E. So E is what? Electricity. P is what? Petroleum and gas. And next one is fertilizer. And remember, fertilizer mein pesticides are not included. Are you getting now? And pesticides are included, but I'll tell you at the later stage where it is. So only keep the word fertilizer. And D stands for drugs and pharma. Now please tell me especially, Dr. Reddy's laboratory and Dr. Renbexi are which company? Pharma. They are regulated by whom? Government. Government regulates the price of medicines so that everyone in India can afford. Like what we have gone through the pandemic situation of COVID. Did they give you the injections or not? 1450 ka as well as 790 rupees ka. So who regulated the price? That's why it is known as a regulated sector. Renuka Sugars Limited. अब sugar is a basic essential commodity which every household uses. So government controls the prices so that unjustified increase in the prices will not be charged to the home customer. Then petroleum and gas. Government, what do you think that how much petrol you are paying for? 107 or 109 rupees, I think. Am I correct? Actual cost which is happening is 137 to the government. over and above price, who is paying? Government, so that you will end up only paying what? 107 rupees. I hope you're getting the point. So these 6 sectors are regulated by whom? Government. Remaining 33 are unregulated, but yes, whenever the government want, they can shift from unregulated to what? Regulated. But presently we have the 6 sectors. Repeat the 6 sectors again. Sugar, telecom, electricity, petroleum, fertilizers. Is it the best way to understand? Remaining 33 are which industries? Unregulated. Now question is, sir, regulated, unregulated we understood. Now let's talk about their cost audit limits. So this is called turnover limits. This is known as which limits? Turnover limits. Now, sir, what do you mean by turnover limits? Try to understand the example. I'll make you understand with the help of example. But they're saying, if your client of cost audit is belonging to which sector? Regulated sector. So we have to satisfy 2 conditions on that. How many conditions? 2 conditions. Condition number 1, its overall annual turnover from the production of goods and services should be greater than equals to how many crores? 50 crores. In the immediately again which year? Preceding financial year. So 25-26 May cost audit will take place or not, that is dependent upon my turnover in 24-25 immediately preceding financial. And in the immediately preceding financial year, if my turnover is greater than equals to what? 50 crores. And what is the second condition? And means what? Both the condition. In case aggregate of those turnover of which individual goods and services for which I started preparing the which records? Cost records, that should also be greater than equals to 25 crores. Now let me tell you the meaning of this. See, there are 2 conditions we have to satisfy. How many conditions? 2 conditions. Let's undertake the example now. Let's take an example. We are taking an example of Renuka Sugars Limited. What is the example? Renuka Sugars Limited. Now, is it a regulated sector now? Now, let's say, for example, in the 24-25, the turnover was 155 crores. What was the turnover? Now, please tell me, is condition number 1 satisfied? Is it 1 satisfied? The annual turnover in the preceding financial year should be greater than equals to 50. Is it greater than equals to? Yes. Now, please understand. Suppose they are manufacturing sugar also. They are manufacturing jaggery also. They are manufacturing ethanol also. Ethanol means when we burn the byproduct called molasses of the sugarcane, we manufacture a petroleum product called what? Ethanol. I don't know whether you know or not, but from the 1st August onward, India may every petrol pump it 20% ethanol will be mixed along with what? Petrol and diesel. So they are slowly replacing petrol and diesel in India with what? Ethanol. Due to which sugar company ke prices are going up in the stock market. Because what was waste for them is petrol resources for the government of India. So they are buying the ethanol. But that is a different case. We'll come back to that later. So suppose sugar manufacturing, jaggery and ethanol. Sugar manufacturing is giving me, say for example, 90 crores of turnover out of 155. Jaggery is giving me, say for example, 35 crores of turnover, and remaining 30 crores of turnover is coming from ethanol. Is it 155? Correct. Now, for sugar, suppose we are not maintaining which records? Cost records. But we are maintaining the cost records for these two. Please tell me, what is the overall turnover limit? Greater than equals to 50 crore. Is it matching? But what is the second limit now? Understand. Read the second limit now. Aggregate turnover of which individual goods and services for which we are maintaining cost record, that also should be greater than equals to what? Now, please tell me one thing. Out of 155, which 2 products are there for which we are maintaining the cost records? Jaggery and ethanol. And what is the combined turnover of these two? Is it more than 25 crores? Cost audit will have. But will your answer change if I'll do this? 120, sorry, 140, 10 and 5. Please tell me. Is cost audit going to take place? No. Why? Second condition is not matching. What is the second condition? Turnover of those goods and services for which we are maintaining cost record is not greater than equals to now 25 crore. Now, even though overall turnover is greater than equals to 50, but now cost audit will not take place. That's the reason we called it as irregular audit. We called it as unperiodical audit. We did not call it as yearly audit. Do you remember I told you in the beginning? So why it is turnover based? Because sometimes your turnover may achieve, may not be achieved. So what is the limit for the regulated sector? Tell me now two conditions. Condition number one, sir, your overall annual turnover should be greater than equals to 50 crores in the preceding financial year. That is fine. But along with that, you have to satisfy this condition also. The turnover from those goods and services for which what is required? Cost records are required. They are also required to be greater than equals to 25 crores. If it is not greater than equals to 25 crores, it means what? No cost audit. Now, let's say, for example, next year, understand 120, 15, 20 applicable. Overall is also matching and greater than equals to what? 25. Now cost audit. So that is why it is a pendulum and fluctuating kind of audit. In one year, it may take place. Another year may or may not take place. Did you understand the point? That is why it is irregular audit. Now, same thing on the unregulated sector. So what is on the unregulated sector? On the unregulated sector, this 50 becomes what? 100 and this 25 becomes what? That's it. Now, please tell me on unregulated sector without looking at the board. If your annual turnover from the goods and service production and manufacturing is greater than equals to 100 crores and turnover from those goods and services for which we are preparing cost record should also be greater than equals to 35 crores, then if your client is from which sector? Unregulated sector, so he will also go through a cost audit. Did you understand the point? This is called rule number 4. Did you get the point? So rule number 3 talked about applicability of cost records and rule number 4 talked about applicability of cost audit. 100% clarity. So please tell me what is cost records and what is cost audit applicability. Try to tell me on your own. So we have to start maintaining cost records when the turnover in the preceding financial year is greater than equals to 35 crores and no other limit, only one. Preceding year turnover is greater than equals to 35 crores and we have to start maintaining what? Cost records. Once it is applicable, always applicable. There are total how many records? 31 records which we need to prepare as per the form number what? CRA1. Are you getting the point? On the other side, what is rule number 4? Cost audit applicability. It has, acha, did you understand what I'm trying to tell? It is not mandatory you are maintaining cost records, so cost audit will take place. Cost audit has separate limits. Cost records have. Okay, I started maintaining cost records because my turnover was 48 crores. How many crores? 48. Please take one. Last time. Ask them to come. Otherwise, it will be too difficult. I hope you guys are understanding. Everything is fine. There's a problem coming. Uh, just slow down the voice. Actually, it is too much of that thing. Hello, 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 hello. No, fine. Thank you. And please switch on the YouTube. Like to see comments and all. Unpause it. Pause. Pause it. Good evening. Good evening. So what if we are not maintaining the cost records the last financial? It doesn't matter, Amma. Once you will start maintaining the cost records from that financial year, you have to start continuing maintaining it. Yes. So once applicable from that financial year, it will be applicable. Is it clear? Yeah. Use. Hello. Problem. That is fine. Okay. So are we done with this part? I hope everything is clear now, right? I hope your doubt is clear, Durga. Okay, great. So this is what do you mean by regulated sector and unregulated sector. Now please tell me when the cost audit is applicable. So there are total how many industries presently in India? 39. We divided it into two parts. What are the two parts? Regulated sector and unregulated sector. Now in the regulated sector, what is the part we have given? Six industries. One is sugar, one is telecom, one is electricity, one is petroleum, one is fertilizers, and one is drugs and pharma. What is the condition for them to get their cost audit done? In the preceding financial year, if their annual turnover is greater than equals to 50 crores and the turnover from those goods and services for which we provided cost record is also greater than equals to 25 crores. So boss, for them cost audit is what? Compulsory. And for the unregulated sector, the same 50 became what? 100 and 25 became what? 35. Is it clear to all of you? Next point, sir, when we do the financial audit and when we do the cost audit, we call ourselves as a practicing CA and practicing CMA. What actually we do you remember yesterday's discussion I told you? In the financial audit, management prepares what? Financial statements as per the compliance of AS, accounting standards and Ind AS. Do you all agree? And auditor uses what? Standards on auditing for the same. As a which auditor? Practicing CA. We do the audit of which statement? Financial statement. We check whether the client is following generally accepted accounting principles or not. This is what a practicing CA does. Now, how cost auditor performs? Cost auditor also is the same thing. Now, management is not preparing financial statement. Management is preparing cost records and cost statements. So they will follow what? Cost accounting standards. I am a practicing CMA. I'll follow what? Auditing standards. And my auditing standards are known as CAAS, Cost Auditing and Assurance Standards. And I'm not doing the audit of FS now. I'm doing the audit of what? Cost statements and cost records. So I am going to check whether the client is following GACAPs or not. What do you mean by GACAPs? Generally accepted cost accounting principle. This is a major difference between these two things. So GAAP became GACAP, SA became CAAS, AS became what? CS. That is the difference between doing a which audit, financial audit and cost audit. I hope you got the clarity between the two. Now, next thing. Sir, when I am performing a cost audit of one client, say for example, Renuka Sugars Limited, I'm doing the which audit? Cost audit. In the same year and in the same client, you can't do their which audit? Statutory audit. You can't do their which audit? GST audit. You can't be their tax auditor. You can't be their which auditor? Internal auditor. So means these four audits are prohibited on you. Are you getting the point? If you are a cost auditor, you can't be their statutory auditor. Because statutory audit who will do? Practicing CA. You can't be their internal auditor because internal and external can't be same. You can't be their tax audit because tax is also a statutory audit under Income Tax Act 1961. And GST is also. By the way, let me tell you one thing. GST audit has been abolished. Actually, there is no GST audit. It is called GST annual return. You can't be involved in that also. So once you are a cost auditor, what are the four things out of your scope? You can't do the statutory audit. You can't do the GST audit. You can't do the tax audit. You can't do the what? Internal audit. Is it 100% clear to all of you? 100%. This is called disqualifications. We call it as disqualification of cost auditor. disqualifications of a cost audit. Is it clear? 100% clarity, sir. Now, next point. So what is the eighth point? I hope up to seventh point everything is sorted. So we started with the first point, ki sir, it is not a which audit? Statutory audit. Point number two, we covered the industry. Point number three, we understood it's not a regular audit. Point number four, we understood ki only who can do? Practicing CMA. Point number five, we understood ki there is a two rules, rule 3 and rule 4. Rule 3 talks about cost records, rule 4 talks about. Point number 6 in May, we understood its applicability of cost audit, and point number 7 May, we understood what things he can perform, what he thinks can't perform. So he can only do a which audit? Cost audit. Remaining 4 are what? Out of his scope. This is disqualification of a cost auditor. Next point. Sir, who appoints? We have to understand qualification, disqualification, completion, period, intimation. Now, I'll tell you one story now. Try to understand it very beautifully and clearly. See, when we talk about a secretarial audit, practicing CS does it. He's appointed by board of directors. But when we talk about a statutory audit, financial statement auditor, he's appointed by shareholders. He's appointed by, in the AGM, which you all have learnt in your company audit chapter, section number 139. He's appointed by the shareholder for the conclusion of this meeting till the conclusion of 6th AGM for a period of, that is a which auditor? Statutory. But when we talk about the cost auditor, we are always and always appointed by whom? Board of directors. Did you get the point? How long? Board of directors have 180 days from the commencement of what? Financial year. Now please tell me, imagine करके चलते हैं कि our two conditions are satisfied. Turnover wala condition also satisfied and cost records turnover condition is also satisfied. So 25-26 what is taking place? Audit is taking place. We are assuming it in Renuka Sugars Limited. Now please understand, when the financial year 25-26 started, it started on 1st April 2025. Am I correct? Can you read the first sentence again? Who will appoint you? Within. Can you please exactly add 180 days to this date? Is it the commencement of financial year or not? It is going to be 27 September 2025. This is the last date when I as a cost auditor should be appointed by whom? Board of directors. Sir, we to generally came to know that audit takes place after the end of the financial year. We only appointed him. He will start auditing when? He'll start auditing after the end of financial year. Now, please tell me when this financial year will get ended. 31st March. After that, he will come and start doing what? Cost audit. So we appoint you as a cost auditor, as a practicing CMA early. But you will start doing the audit what? Later. Reason? We need planning, we need strategy, we need resources, we need program. All of these things, for that, you need 5-6 minutes. Now, please tell me, do I need to know what Renuka Sugars Limited is all about? So for that, do I need a time? So from September to March, you are doing your planning. And there you go. The moment 31st March 2026 will come, from the 1st April onwards, my audit journey will start. So when do we appoint the auditor? By the board of directors within 180 days from the commencement of financial year. Is it 100% clear? Next point. Right? Next point. Board after the appointment of which auditor? Cost auditor. Board after the appointment of cost auditor. Who doesn't know that we have appointed a cost auditor? Central government. Again repeating. When statutory auditor is appointed, his intimation goes to ROC. But we are now appointing cost auditor. So we will intimate directly to whom? Central government in form number CRA2. So what is CRA2? Intimating the details of cost auditor to the whom? Central government. By the whom? Board of directors within 30 days. Within how many days? So let's say for example, I was appointed on 1st August 2025. When I am appointed? 1st August. So by 31st August, my intimation of details should reach to whom? Central government. So the day when I am appointed, what is the last day of my appointment? 27. Within this time period, they should appoint me. The day they appointed me, within 30 days, my intimation of details should reach to whom? Central government. Within how many days? 30 days. Is it clear? Form number is what? CRA2 and CRA1 we already know is for which records? So 1 and 2 you agree? Now let's say for example, our cost auditor resigned or died or removed. What are the two things happened? Suppose his Atma met with Paramatma, he died. Or suppose he himself only unwilling to continue, he what? Resigned. Or we didn't like his work, we what? Removed him. So in case of death, resignation and removal, is there a casual vacancy? Yes. So we call it as a CV. What is CV, sir? Casual vacancy. So if the casual vacancy will arise, what will happen? We will again tell board of director ki boss appoint the new cost auditor, and board will now have again responsibility to appoint the new cost auditor within how many days? Now 30 days. Now not 180 days. 180 days time period is gone. Do you have that many days now? No. So government is saying please fill up the casual vacancy within 30 days. So new cost auditor will come within 30 days. From the day he will come, again we have to intimate to whom? Central government. In form number what? CRA2 within how many days? 30 days. Did you understand the story or not? So central government knows the first auditor, na? But first auditor is no longer, he resigned, he removed or died. So new auditor intimation we are giving again to whom? Central government. In form number again? CRA2 within how many days? So what is first 30 days? To fill up the casual vacancy. What is the next 30 days? To intimate it to the central government. So far, did you understand this story of the part? So tell me, who appoints you? First appointed by the board of directors within 180 days from the commencement of what? Financially. Yes, Akash, he can file 9NNC. Yes. So did you understand? So he is appointed by the board of directors within 180 days from the commencement of financial year. So we appointed. Who doesn't know? Central government. So we'll send the central government form number CRA2, giving the details of which auditor? Cost auditor. Am I correct? Then within how many days? 30 days. Suppose our auditor died, resigned, or get what? Removed. Again, we'll fill up the casual vacancy within 30 days. Again, by whom? Board of directors. Again, we are intimating to whom? Central government. Within how many days? 30 days. Form number CRA2. Great. Now, so once financial year will over, when the financial year will over as per our example, 31st March 2026. So 1st April 2026 onwards, who will start coming and doing the cost audit? Cost audit. So he has 180 days from the end of the financial year now to complete the audit. So it means what is the date as per example 27 September 2026 is the last date he should have completed the audit. I hope you understood. So repeat again, when we are appointing him within 180 days from the commencement of financial year, when he is completing the audit within 180 days from the end of the financial year. So it means we appointed the last date is 27/9/2025. His last date to submit the cost audit report is 27/9/2026. 100% clarity. Sure. Now, who appointed him? So after the completion of audit, cost auditor will submit the cost audit report also to the whom? Board of directors only, but in the form number now CRA3. So what is CRA 1, 2, 3? Quickly. Our 4 forms are over. 1. Cost records. 2. Intimation of cost auditors details to the central government. What is 3, sir? Cost audit report. What is the form number? CRA3. To whom? Board of director. Along with his what? Modifications and reservations. Sir, ये क्या होता है modification and reservation? I hope you remember we can issue 2 types of reports. Unmodified reports and modified report. Unmodified report means positive. Modified report means negative. So if I have something seen negative in the Renuka Sugars Limited, so I have every right to tell it to the board of directors. I didn't like this area. Your internal control systems are poor. You're not maintaining cost records properly. We call it as modifications and reservations. What do we call it as? Modifications and reservations. So now, who does not have the copy of this report? Central government. Who does not have? So board received the copy. Board, after receiving the report, within how many days? 30 days. So the moment they receive the cost audit report, within 30 days, they have to pass the comments on those modifications and reservations which are kept by which auditor? Cost auditor. Did I kept the negative things? So they have to pass the comments. Their comments plus one copy of cost audit report. Who will send to whom? Board now will send it to whom? Central government in form number CRA 4. Within how many days? Within 30 days. Within 30 days. I hope all of you understood now. This is actually the story of whole cost audit. Starting से revise करते हैं. Who appointed you? Board of Directors. How many days? Within 180 days from the commencement of financial year. Right? You are being intimated to central government in form number CRA2 within 30 days of your appointment. By the whom? Board of Directors. Suppose if the cost auditor died, removed or resigned, again there will be a casual vacancy which will be filled up again by the Board of Directors within 30 days, and after appointing you, again you have to intimate your details to the central government in form number CRA2. Right? Now you have started your audit, so you have maximum 180 days from the end of the financial year to complete your what? Cost audit, and you will issue a which report? Cost audit report to the whom? Board of Directors, form number CRA3. Now I have, say for example, I have kept some modifications, reservations and negative remarks. So board has to give the explanation, justification and comments. So they will pass the comments. How much time they have? 30 days now. How much time? Within these 30 days, they have to pass the comments also, take one Xerox copy of the report also, club it together and send it to whom? Central government in form number CRA4. Within how many days? 30 days from the date they received the report from the cost auditor. So within 30 days, your comments also should be ready and one copy also has to be filed to whom? Central government. Is it 100% clear? Sure? No doubt at all? Right? Everyone in the online also, every one of you clear? Please reply. In the online, please. Waiting for your replies. Please let me know. I hope everything is clear so far, right from the appointment till the completion. Okay. Chalo, let's proceed. Up to this, any doubt, Emma? Everything clear? Super clear? So this is what you mean by section number 148 ka half. This is what we are done with. Am I correct? Now, there is one small amendment recently introduced by Ministry of Corporate Affairs. Now listen to this point. Let's imagine AGM. I hope you know AGM. What is AGM? Annual General Meeting was supposed to happen on 30th September 2026. What was the date of AGM? 30th September 2026. But unfortunately, due to unfortunate reasons, what happened? This AGM got delayed, right? So company went to whom? ROC. Sir, please give us an extension. I hope you know that under section number 96 of Companies Act 2013, if your AGM does not get conducted within 6 months from the end of financial year, so what is the last date? 30th September 26. Then in that case, you can go to the ROC for asking a permission for extension. ROC may give you 3 months of extension maximum. What is the maximum? So 3 months of extension means what is the last date? 31st December. Reason? क्योंकि one AGM in every calendar is must. क्योंकि if the ROC will give you more than what? 3 months, what will happen? AGM will get to next calendar year. So the rule of the AGM will be broken or not. So ROC can maximum give you. लॉजिक समझ में आ रहा है आपको? ठीक है? क्योंकि लॉजिक के स्पेलिंग ही लॉजिक है. इट्स नो लॉन्गर लॉजिक, इट्स लॉजिक. लॉ प्लस ऑडिटिंग अगर आप मिक्स पढ़ोगे ना, यू विल नेवर फेल. नाउ अंडरस्टैंड. We went to the ROC. Now ROC told me, okay, I'm giving you 45 days of extension. Up to 3 months ROC can give you, but ROC is not certain. So ROC gave you 45 days of extension. It means now I can conduct the meeting on 15th November 2026. Am I correct or not? After 45 days of extension. Now listen to me carefully. In case the AGM is not held on time and ROC has granted you the extension, that extended time period will be added in this 30 days. Now, please tell me, when do we send CRA 4 to central government? Within 30 days. By whom? Board of Director, along with their comments or not. So this will become 75 days now. 30 plus 45. Whatever the extension ROC will give you, in AGM extension, that equal time period will be added in your what? 30 days. So you can delay your CRA 4 also by that 20 days. क्योंकि AGM ही नहीं हुआ ना sir. Are you getting the point or not? 100% clarity? Everyone on the online as well? So this is what do you mean by the point which you needed to know. Yeah, read this point. If AGM delayed or postponed, whatever the extension who has granted, ROC has given, this extended period shall be added to what? Above 30 days. 100% clarity. I hope all of you is clear. Chalo, let's proceed with the next topic. Okay? Now, what is the next topic? Now see, please tell me who appointed me. So only board of directors have the authority to remove me. So I can also be removed only and only by whom? Board of directors. Next point. After giving what? Opportunity of being heard. What do you mean by opportunity of being heard? We will give you a chance to defend your what? Removal. Ki why we should not remove you. Am I correct? First of all, why the removal takes place? Maybe we did not like your services. Maybe you are not meeting our standards. Maybe the board of directors did not wish to continue with you. Some conflict happened, but we will give you opportunity of being heard. Now remember, when you get an opportunity of being heard, never take needless publicity in that. What do you mean by opportunity of work? Now, what's your name, Amma? Harini. So Harini, you are going to be removed. Am I correct? So I told you that the board of directors took a decision by passing board resolution. We are not going to continue with you, but we are giving you opportunity of being heard. Opportunity of being heard means what? Harini will send one representation letter to the board of directors. This is the reason. Please don't take me out of the company. Don't remove me. Now, what the Harini did, she said that I know Chief Minister of Telangana, Revant Reddy, he's my neighbor. I'll do this, I'll do that. What is it wanted, or it was needless publicity? So you should never ever do the opportunity, never ever do this opportunity having a illegal advantage. So don't do the needless publicity. Or second thing, in case Harini is defaming the company is this, company is that, company does not prepare cost records properly, company Flana, company Dimgana. So is Harini defaming the company? I only gave the opportunity of being heard and she's putting the spit on me only. Am I correct? So if you're defaming the client and if you are taking needless publicity, in both the cases, your opportunity of being heard will be cancelled. Is it 100% clear? Crystal clear? So who will appoint you? Board of directors. So who will only remove you? Board of directors, but only after giving opportunity of being heard. After passing a which resolution? Board's resolution. I hope everything is clear. So this is what brings an end to your topic called what? 148. Introduction of the audit called what? Cost audit. I hope everything you know, right? Now there's one small topic left. What is this topic? Sir, exemption under section 148. Now, if my client is operating from SEZ zone, if he's operating from which zone? SEZ zone, then there is no cost audit irrespective you are from regulated sector, you are from unregulated sector, your turnover is matching, then also you are completely exempted from what? Cost audit. Did you get the point? Second thing, if my client is registered under MSME Act and it is a small and medium enterprise, remember MSME, Micro Small Medium Enterprise Act. What is the name? Micro Small Medium Enterprise Act. So if my client is registered under what? MSME Act, then also he is exempted. So who are the two exempted? But the question arises, why, sir? Always remember, if you really want to conquer any subject, have a habit of asking doubts. आ जाओ मेरे को कि सर आप हमें ये भी बताओ वो भी बताओ. That is the best way because this is your final stage of CMA final. Understand one thing, giving you a brotherly advice. After getting qualified, you're not going to listen to anybody. I'm telling you, your attitude will come. Ego will come because I'm a CMA now, qualified. It is actual. That is there with me. I have attitude and ego, but I only show when the need arises. Are you getting the point? So what will happen if someone will try to make you learn na, अरे भाई ये पढ़ ले वो पढ़ ले, अरे what to रे, CMA already qualified this and that, attitude, ego. This is the last time you're listening to the people like us, faculties. After that, nobody is going to teach you anything in your life. So maximum knowledge what you can grab is in the CMA file. And don't only do the subjects only for the sake of doing it. Do the subjects for the sake of implementing it in your real life. Now, please tell me one thing. Frankly, I need a feedback from you all. Did you find the difference in what you learned earlier and what you are learning now? Am I correct or not? With the logics or not? That is what the difference between you found between doing it and doing it properly. Did you get the point or not? What you learned in CMA inter, or maybe you might have done self-study, but this kind of clarification, you might be not having it. Are you getting the point? So there is always a logic behind everything. Try to understand. More questions you will ask, I will also feel more to tell you that. Right or not? Now, please tell me why special economic zone companies get the exemption. Reason. It's a very backward area. Like Duvada in Vijayawada. Oh, sorry, Vizag. Near Vizag, there is an area called Duvada. Duvada is a special economic zone. That was a very backward area. But the moment when the Vizag steel plant constructed that factory over there, that was treated as a SCZ zone. Now, what happens due to SCZ? More electricity, road construction, school, colleges, power backup, things will get developed. So, government is saying what? You are developing my nation. Why shouldn't I give you some benefit? So, tathastu. Take cost audit as an what? Exemption. Second thing, reason, because they are already which enterprise? Small and medium enterprise. What is the third reason? If your client is 100% EOU, what is EOU? Export oriented undertaking. Whatever he is manufacturing, he's selling outside India. Export sales. What is the reason? He's bringing foreign currency. Foreign reserves are increasing. The government is saying you are doing a good job. You are increasing exports and reducing what? Imports. So that's why we are giving you exemption. Then these people started crying who was sitting aside. So they are saying, sir, we are also having more than 75% of our turnover is also in which currency? So we also need what? Exemption. So government said 100% so definitely will get exemption if you're out of annual turnover, out of which turnover? If more than 75% of the turnover is in which currency? Foreign currency, then also you will get a exemption. Then government realized कि एक काम करते हैं, those companies who are having their own power plant, matlab I have my own solar energy, I have my own wind energy, hydro energy, thermal plant, and not only I'm generating the electricity, with the same electricity what I'm generating, I'm using it for my captive consumption. मेरा production manufacturing मेरी ही electricity से हो रहा है. So am I a self-sufficient company? Am I borrowing electricity from the government? No. It means I'm a self-sufficient company. Government बोलती है again तथास्तु. No cost audit. So what are the 5 entities who are going to get exemption from the cost audit? If your client is operating from SEZ zone, if you are 100% EOU, your client is a micro, small, medium enterprise, your more than 75% of your annual turnover is coming in which currency? Foreign currency, and you are having your own power plant and making sure that you are not only generating it, you are using it for your captive consumption. So if any of the condition is satisfied, the boss, you are qualified to get what? Exemption under section number 148. No cost audit is going to be applicable on it. I hope everything is clear. Offline, online, everyone? 100% clarity, sir. They're also in the online as well. Please let me know if everything is clear. Sorry? No, cost records you have to maintain. Cost audit exemption. Cost records so you have to maintain because that is for your own purpose only. Are you gonna, why the company prepares books of accounts? I should know na what is my sale and what is purchase. Same way, cost records are not for the auditor purpose. It is for your purpose. Auditor comes and just what? Examines it. But you are maintaining cost records for your thing. It is an exemption from cost audit. Mostly. But yes, if your turnover is also less than what? 35 crores in the preceding financial year, you to definitely can, right or not? So I hope everything is clear. Done? Chalo. Now, this is what the place I was telling you. Now, see, do you remember the history and background we did? I think you were a little bit late at that point of time. You might not be aware. We have done the history background. Am I correct? So, 1944, you remember? We created it as a company. 1959 में we turned it into an act. 1965 में cost audit was introduced. 65 to 2008, 44 industries were there. 2008 में expert group was created. 2009 में they gave an recommendation, let's reduce it to 39. 2011 में we framed CRA rules, and 2014 में CRA rules got reframed because of Companies Act 1956 got changed into what? 2013. I hope everything is crystal clear. Now understand one thing. I'm going to borrow from there. Now please tell me, Companies Act 2013 came into existence when? Yes, MSME also they have to maintain the cost record, but they have an exemption actually. So from the cost records also cost audit. MSME mein there is one exemption. Right? MSMEs don't have to maintain cost records also. They don't have to maintain what? Get the cost audit done also, because they are very small entities, basically handlooms, handicrafts. These are the entities which generally gets open in the form of what? MSME, flower export. ये वाली companies होती हैं. So government generally gives them the what? Exemption. Clear? Now understand one thing. Companies Act 1956 got replaced by Companies Act 2013 on 1st April 2014 onwards. Which onwards? 14 onwards. Am I correct or not? Why I know? Because that was the biggest blow to our profession. I qualified in 2011. I was teaching law and auditing at that point of time. I was teaching Companies Act 1956. So suddenly government changed the whole act. So we had to flush out the whole Companies Act 19. So I did my foundation, inter, final, everything in what? 1956. Same with the CA, CS and CMA. All triple may I did what? Companies Act 1956. So I was to thinking happy, but suddenly government took a decision. This is the first shock we got in my generation of chartered accountants. Second shock we got it in 2017 again, when the GST came and replaced what? Excise, service tax. Am I correct or not? So abhi kya hai? Custom, excise, goods and VAT and service all got what? Together under the form of GST. So two times this thing has happened with us. But keeping the thing aside, 1st April 2024 Companies Act 2013 came. Am I correct? I already told you 2014 mein CRA rules got what? Revised. So when they revised, not all the industries were covered first. They first covered some industries. Because remember, whenever you shift from one act to another act, we call it as transition period. What do we call it as? So Government of India gave 1 year to the industries. From 1/4/2014 till 1/4/2015. These industries were given the time frame to start preparing the which records? Cost records. I'm giving you 1 year extra time. What is extra time? 1 year. It means they got covered under the CRA rules when? From 1/4/2015, not from the 1/4/2014. Did you understand the point? So some industries got covered under 1/4/2014 itself only, but some industries got covered under the CRA rules from 1/4/2015. Now, what are the list of those entities that you have to remember? So understand one thing. What is the first one? Coffee and tea, milk powder industries, insecticides, plastic and polymers, tubes and tires, pulp paper, textile, glass, other machinery and mechanical appliances company. And if you are into electricals and electronic machinery appliances company. So if you are any of these companies, you are not covered under the CRA rules from 1/4/2014. You got covered from 1/4/2015 onwards. Why I'm telling you one or two times this? Because recently one MCQ came on this one, which out of they give you 4 options and you have to tell. So you just, if you keep on remembering this limit for 1 or 2 times, you will automatically come to know that this is the list. So just repeat 1 or 2 times: coffee and tea, milk powder, insecticides, plastic and polymers, tires and tubes. If you'll remember this, other than that got covered since 1/4/2014. These got covered from. So again, you don't have to remember 1/4/2014. You have to remember 1/4/2015. 15. So glass is there, tires are there, pulp and paper is there, textile is there, other manufacturing and mechanical appliances, electronic and electrical machinery. Is it clear to all of you? So this is what do you mean by the applicability of cost record. I hope you understood. So just remember this list, you have to remember it 1 or 2 times automatically. Now, if I'll ask you, tell me fertilizers without looking at the board. It is not in this list. It means it is from steel, aircraft, pulp and paper, textile, pesticide. Pesticide, one for 2000. Insecticide, one for 2015. Correct, correct. You are right only. You need to be confident when you are saying something. Am I correct? Because I am asking you a question. I'll definitely make a face like that as if you're giving me a what? Wrong answer. You have to be very much good in that. Electronics, mechanicals, coffee, but tea, coffee and tea both are in what? 15. Are you getting? Coffee and tea both are written now. Milk powder. Are you getting the point? So you just need to go through this list 1 or 2 times. Captive consumption means you are generating the electricity, and the same electricity what you are generating is using it as a source for your production and manufacturing activity. This is what you mean by captive consumption. Means capital consumption for manufacturing your goods and services. You are generating the electricity and you are using it also for your production activity. That is what the meaning. I hope it is crystal clear. Answer? You can sell it to the government also. I don't know Telugu, sir. Uh-huh. No, you should be self-sufficient. Self-sufficient. Are you getting? And one more thing, if you have extra, na, you can sell it to government also. So it means government is rather more happier. That's what government has introduced the solar energy projects also. So if you have a 3 BHK flat or something like that, you can install a, this plant and machinery for 4,75,000. They will give you yearly 1 lakh subsidy for 5 years. So it means your cost is recovered, but in the span of, in that, after 5 years, whatever the electricity you are manufacturing, whatever you are using it for your own house, other than that, if you are manufacturing extra units, you can sell it to whom? Government is ready to buy at 7 rupees per unit. Are you getting the point? So these are the kind of initiatives government is bringing so that they can push the people to have a better thinking, right? So I hope everything is clear up to this point. Now, please understand one next topic. What is the next topic? Once you get, last topic for the day, once you get appointed as a cost auditor, remember one thing, directly no one appoints you. They first propose you as a cost auditor. Ki would you like to be our cost auditor or not? Appointment letter comes when? Once you give these 4 declarations to whom? Company, board of directors. The board of directors on your letterhead will demand the 4 declarations. Number 1 is sir, me as an individual. What do you mean by individual? Means sole proprietor. In 3 ways you can practice in India. Either you can practice in the form of sole proprietor or partnership firm or what? LLP. Company form of cost accountants are not allowed. So me as an individual and my firm as a partnership firm or LLP is not what? Disqualified under section number 141. I hope you remember disqualification: body corporate, officer and employee, indebtedness for more than 5 lakh rupees. You can't hold any shares and securities in your client company. You are prohibited to provide services under section 144. I hope you remember the disqualification wala company audit when there was one section number 141. So you have to declare on your letterhead in writing to the client that, sir, I'm not disqualified under section 141. So me, my firm, my being sole proprietor, partnership firm or LLP, we are not disqualified under section. That is a declaration number 1. You have to give it to the board of directors. Declaration number 2, sir, me or my firm is qualified to be a which auditor? And it means we are holding a what? COP. हमारे पास certificate of practice है. So we are not a non-practicing CMA who is going to sign your audit report. Remember, You can have a firm with non-practicing CMA, but you can't allow your non-practicing CMA partner to sign it. So COP gives you the which authority? But you are telling that, sir, we are having a COP, that's why you're qualified. So point number one, we are saying we are not disqualified. Basically, same point only. In the second point, you are saying we are qualified and we are a which holder? COP holder. Third point, you are telling that, ki, sir, we are qualified to accept this cost audit as it is within our limits of doing what? अच्छा, यहाँ पे आके some students will get confused. Sir, are the cost audit also have the same ceiling limit like a chartered accountant doing company audit? I hope you remember in company audit, you might have seen that ki one practicing CA in one financial year cannot do more than 20 company audits. Remember, this kind of limit is not applicable for us. We can do as many. We are already very few in the market. Are you getting the point or not? So this limit is not applicable, but we are simply telling to the management ki yes, sir, we are nothing but not breaching our limit. We are qualified to be your auditor. And the most important one, sir, me, my firm and my partners are not having any kind of pending cases and any kind of litigation in any statutory authority, in any court in India or where. Or, matlab, we are a clean firm. Neither me nor my partner nor my what do you say firm are having any pending civil case or any pending criminal case in India or outside India in any statutory authority means tax department, GST, custom or ICAI, ICMA कहीं पे भी हमारा case नहीं है. We are a clean firm. These are the 4 declarations. You give it to whom? Board of directors. After that you will be appointed as a word. Then they will send you the appointment letter. So this is before appointment. You have to send Kisor. These are my 4 declarations. After that, they will. Same thing. Who also does? Statutory auditor also does the same thing. Are you getting the point? Statutory auditor also has to tell the same thing. There's no change in that. So this is what the 4 declarations you have to give. So today we have understood a very important topic that is called basics of cost audit ka section number what? But along with that, you have the other company audit section. But don't worry, not 39 to 148. Some sections are there. Like 148 we have done. So tomorrow, if I'm not wrong, we are going to understand some examples and we'll do section number what? 141 disqualification. I think you have section number 140 also. That is resignation. You have section number 144 removal and you have section number 143 duties. After that, our basics of cost audit chapter number 1 will be over. It's a very small chapter, simple chapter. Copy paste of your which section, which chapter? Company audit. Except some few section, you don't have 139, you don't have 145, 146, but that I will tell you, they are also equally applicable. Even though you don't have, I'll tell. After 145 we'll be reaching, after doing 11 disqualifications, we'll be reaching to qualifications. After the qualifications, we'll do 140, 142 remuneration. We'll do this section. This is the most important section, full of amendments. 143 duties of a cost auditor, right? So that we'll understand. There you go. Thank you so much for today. I hope you liked the session. Understood? Clarity mila. So this is what the same level of clarity you will be getting in the upcoming sessions also, right? So see you guys around. See you guys tomorrow, and tomorrow we'll start with the section number 141, right? Bye everyone. Thank you. Bye everyone on the online as well. See you guys tomorrow at the same time. What's that? Which one? Uh-huh. Minimum 10 years ban. So it is 10 years or service of imprisonment, whichever is later. Are you getting it? Suppose you are being jailed for 5 years, but you are jailed for fraud now. Am I correct? So minimum 10 years or jail term, whichever is later. What is later? 10 years. So minimum 10 years ban. But if your jail term is more than 10 years, then jail term.